Okay, here is our update on precious metals. We'll start with gold as we often do. And it's September 20th, Tuesday night. It's the night before the FOMC meeting, or I should say the FOMC announcement. They've been meeting these last couple days. They're going to have their announcement at 2 p.m. Eastern time, and then press conference at 2:30. So we'll start with the gold chart. So this was what we thought was a daily cycle low on day 30. And so this is actually, and take a look at the links in the description. You can see my broader market update where I talk about the S&P 500. This is a similar situation. Like, in general, assets are just, there's like, they're like just highly correlated with each other, which is usually not necessarily a great sign. So, but what I mean by that is, right, that like we have this potential daily cycle low here, but then we rolled over, and this might actually be our daily cycle low here on day 40. And so we're kind of open to that possibility. This is a ugly looking daily cycle that just, if this is a daily cycle that just started, it looks pretty ugly, right? We're 3 days in and we're like going nowhere so far. But again, we know there's the Fed tomorrow. And so in general, markets are just kind of like marking time, waiting for that data point to then kind of react to whatever direction. But I mean, this just looked ugly in real time, as we talked about in previous videos. Real look of a bear flag that just spilled over. This is also looking like a bear flag, unfortunately. And so one possibility is this is day 40, and so today we're starting day 3. The other possibility is that this was day 10, so this is day 11, 12, 13. We'll just mark that here for now. Call this the bearish count, right? And so it doesn't really matter, actually, right? Whether you take the bearish count or the bullish count, this is a downtrend. I'll just make sure that we're like really clear as we kind of draw the levels. Again, this is about education. I want to make sure everybody can see this, because this is a textbook downtrend. If you want to learn about trend analysis, this is a perfect way to do it. So we have our high on day 14, our daily cycle low, or excuse me, our daily cycle high, or DCH. After you have your DCH, you generally begin a downtrend, which is a pattern of lower lows and lower highs. Lower lows, excuse me, I'll just draw this out first. Right? So I'll just keep that there for now. So we cascaded lower, so that's our low. Then we had a bounce. And so this is our high. So this is our low, and this is our high. What kind of high is this? It's a lower high because it's lower than this high. And then we made another trip down, and we have another low. What kind of low is this? It's a lower low. Lower compared to what, you ask? This one, right? Like, I hope you're like, this is clear. This is a low that's lower than this one. This is a low, or excuse me, this is a high that's lower than this high. This is a low that's lower than this low. This is a high that's lower than this high. This is a low that's like, that's how it works, right? Lower low, lower high. Lower low, lower high. Lower low. So you have to ask yourself, it's like, one of those puzzles, one of those things like, what do you expect happens next, right? If the downtrend continues, it will be another lower high. We'll have a bear flag kind of situation, and then it'll spill over into a lower low. That, we can't be sure that's going to happen, especially because we have the FOMC tomorrow. We really don't have any edge right now. And again, this goes for all assets, not just gold, precious metals, or anything, but just in general. We know that's a big enough catalyst that it's unwise to try to predict what's going to happen versus just letting it happen and then reacting using our skills of reading price action to be able to understand what's happening with the market when it happens in real time. So that's, I hope that's helpful. Like, this is how, like, you don't have to follow, like, you don't have to take people's word for things like blindly. Open a chart, just literally look with your eyeballs. You can do it. And so this is a weekly chart. Similar situation here on the weekly. So we have a pretty clear weekly cycle low on week 31. And then, oh my God, that's not good. A really early weekly cycle high on week 3. Not a good look. More downside follow through. We've already broken the low below this low. Now, is it possible? So this is week 4, 5, 6, 7, 8, 9. So again, in the same way, the bearish count would be week 9 of a new weekly cycle, which means we've got another maybe 10 weeks of downside, right? Assuming the weekly cycle is going to be like, 20 weeks in that neighborhood. This one was 18, this one was 22, this was 24. So it gives you a kind of a sense. So that's the bearish count. Now it's possible, gold bugs love this term, an undercut. It's totally possible that this is just your undercut. In the same way that wasn't a real DCL, it could be, and that DCL is here on the weekly, by the way. In the same way that this wasn't a real DCL, it's possible that this isn't a real, or this wasn't a real ICL somehow, and this is going to be our ICL, and then we see if we get a rally from there. That doesn't mean it's going to be right translated either, right? We could get a rally on the weekly if we get, bullish reaction from the FOMC, for instance, but then we could still have a lower high early and then start the cycle decline lower. In some ways, it's funny, and I hope you understand what I'm saying when I say this. In some ways, it's possible that if we do get a weekly cycle low here, that could still be bearish, because imagine if we have another really short weekly cycle advance that's like 4 or 5 weeks, and then we fall for another 15 weeks. So again, this is all speculation. Once we see, once that data is released, we see the action in the charts. We'll see. Right now, this thing is moving lower, right? Like you can see, that's just the direction that it's going in, and so it's going to be a question: do we get a reversal? Your weekly candle is is red, and we opened at 1675. So not that far from here. We just need to get above 1675 to go green on the weekly, and that's one of your first sort of wake up signals. You can't reverse a downtrend until you've gone green on higher time frames. That's an important axiom. That's really important, or that's really just a key sort of building block to how you understand price action. Going from red to green, incredibly important signal when you're looking for bullishness. And obviously the reverse is true. Longer term, we're on week 81. And I think gold bugs are finally starting to accept that, I guess maybe we are on the 8-year cycle decline. But I think that the new interpretation now is that maybe this is the low. Now we'll have to see, because if it is the low, if we're getting our 8-year cycle low on month 81, that would be really bullish, because that would mean we're about to start the long-term cycle advance. If it's an 8-year cycle, the advancing phase is going to last for years, theoretically, unless it's really bearish and we get a crazy early top. That's why when I say don't worry about missing the train, think about that. If it's an 8-year cycle, even if we only rally for 2 years, right? You're not gonna miss it. If it's gonna rally for 24 months, you have 24 months to get in. If you miss the first even 3 months, 4 months, God forbid, it'll be okay. So you don't have to get FOMO. Wait for the price action signals. This thing has been kind of circling the drain for long enough. But again, the good news is we're closer to the end, right? The last 8-year cycle ended on month 86. We're already on month 81, right? The one before that ended on month 92. Now, that's still several months of downside, potentially, but we've been falling since month 56, right? So what is that, like 25? Yeah, a couple years basically, right? So August of 2020. And so just a little bit more patience, which means don't necessarily jump in before you have a real price action signal, at least in my humble opinion. Let's flip over to silver really quickly. And so silver is actually the bright spot here. I mean, look at the difference between silver and gold. Gold is plumbing new lows, and silver is just staying in a bull flag formation. So 8, 9, 10, 11, 12, 13, day 14. So we are getting later in the daily, it's not early in the daily cycle anymore, but we're holding the 10-period moving average very nicely. And I drew these lines from the previous video. All of this, so these last basically 7 days are all just consolidation inside this candle. This candle has a low at 1880. So that's the level we're going to really want to watch. Again, these moves tend to be incredibly violent, very volatile. So I wouldn't be surprised if that 1880 level got tested. And go back and again take a look at the video. This obviously like tested this level. Like this line was drawn before this price action happened. And so this is a perfect example. Now, it sliced through it, right? It went below it. This is a false breakdown, by the way. They're everywhere. Then this is also creating, or if it almost created a bullish outside candle compared to these candles. But the point is, these levels are important, right? We got to the 1880 level, and it also is important to note they're not levels as much as they're zones. I just want to be clear about that. When I draw a line, it doesn't mean this line is at 1882. It doesn't mean I think price is going to stop at 1882 on the dime, but it's probably going to stop around that zone. And if it doesn't, and I shouldn't say stop, I would expect price to have some reaction to that level, right? Because this is your consolidation zone. This is the range you've been trading in. So I would expect if we get to the bottom end of it, we're going to have some kind of reaction. So you really want to watch what happens within this box on the Fed meeting. Do we get a spike lower, another test here, and then off to the races? This could be a perfect opportunity to put in like a buy stop, for instance, right? You put a buy stop around this level. You put your stop loss, you find a lower time frame level. But so silver is definitely much more bullish than gold, to be clear. And it's also the case that GDX, I think, is actually a little bit more bullish as well. And we'll look at that next. If we look at the weekly chart, silver made its weekly cycle low on what looks like week 31, although it's not the same actual calendar week as the gold week 31 speculative ICL. But we had this inside week the following week, and then we had follow through last week to give us our swing low. And now we're just consolidating, right? Again, multiple time frame analysis. That huge candle on the daily chart that everything is consolidating inside, that's what's forming this huge weekly candle, right? This range is dominated for that entire week, and so this range is basically the same as that candle. These are important concepts. If you don't get it at first, it's okay. But this is how you start to have a shorthand to the markets to really kind of understand, this thing that's happening on the daily, even without looking at the weekly chart, you should already know what's forming on the weekly because you can almost visually see the candles together. So all of this is just consolidation. We'll have to see what happens, how silver reacts to that box. And again, this is the CFDs, not the futures. But that same box, let's just flip over to that really quickly. That same box exists on the futures. It's the same pattern, obviously. So last thing I'll say is the monthly, really important. I talk about this all the time. The outside candles, a concept popularized, taught by the Strat. Really great content on Twitter. I say just look up hashtag the Strat. But we're set up for a bullish outside monthly candle, and because it's on the monthly level, that's a really important pattern. We have 7 trading days left after the Fed announcement tomorrow. So, Thursday, Friday, and then all of that next week. So plenty of time for this to play out. Again, that's assuming we get bullish reaction from the Fed. So that's actually a good, that's a good way to gauge your sort of upside, that if we do get that bullish reaction, you could expect we're going to go through the 2089 zone. And so call it 21, right? Roughly. And so you'd expect price is going to have some reactions to that level, as I said before. And then if we're able to break through it, maybe even back test it from above, then we're maybe off to the races. We're going to test something like 2250. But this gives you nice, really clear levels because you have this bullish outside monthly candle that's been forming all month. That's been kind of cooking, waiting for that catalyst, as it were, in the FOMC meeting. And finally, we'll go to GDX. So GDX, nowhere near as bullish as silver. It has its top on day 6, 7, 8, 9, 10, 11, 12. So this is a little bit of a problem. Well, but at the same time, not really. Because, again, we know how big a catalyst FOMC is. But this does present a great trading opportunity, right? Because it means if we're on day 12, it's so tomorrow will be day 13 is what this means. It's super early for a daily cycle low. And so it's possible that it makes it more likely that we're actually going to go above this high at 25.72 and make a new high for this daily cycle. Doesn't mean it's going to be bullish, but it at least tells you, it at least gives you a level to trade against, a couple bucks to the upside kind of thing. Now, it's entirely possible that instead of being day 12, this is actually day 40, right? Like this is not your daily cycle low, and we're still in we're still in a daily cycle, or we're still in this same daily cycle, I should say. If we look at the weekly chart, you always want to look at multiple time frames to get more clues, or cues, I should say. So there's a like really weak swing low from week 31. So remember that swing low for silver. That's the same week as this one. So GDX is kind of following silver, except not nearly as bullish. And so again, this is a case where all that matters to right now is how the market reacts to this news tomorrow, because this weekly candle is just an inside candle, and we would expect we'd be testing this high here at 25.71, which, not a coincidence, is the high from this, is the day 6 high from the daily. So again, multiple time frame analysis, important concept. And on the monthly, this did look much more like the silver chart, where we had more of this candle filled in, but we've had a pretty big pullback. All the same, this is still setting up for a bullish outside month, and that would be above 27.64, which is, wow, that's a nice little move. That's well above this. So that's a good, and again, trying to think about how all the pieces fit together. That a move to around 27, call it 27.50, would make sense in the context of getting above this high here and even getting people excited. It doesn't mean we are going in. It doesn't mean things have to be bullish, because I talked about this, and this is important. It applies to the gold chart as well, and the silver chart for that matter. This kind of crazy downdraft has to have a lower high if it's going to go much lower. I'll say that again. This is really important to understand. And like, let's just actually look at what the decrease, like just from this swing high. Oh, that's the wrong thing. So from this swing high, yikes. Oh my God. Jeez. So, and that's not even from that, like, that's not even if you were holding from August 2020. You're down a lot more. But if you manage to buy the top in, I'm sorry. If you manage to buy the top in April, you'd be down about 45% now, right? Now, that's what I mean by this is that for something to go down like 45%, right? And let's say, and I'm not saying that that's what's going to happen, but let's say we have a date with like the COVID low, right? So let's say it's not even the COVID low, and we're just going to find ourselves down about 50%. And I do want you to also observe 50%, like we're already down 45%. So it's like, wow, down 50% is still like a decent amount more percent down. Like it's a lot more than the 5 percentage points that it seems. But even if we were going to make a move down to there, let alone like, let's say we're going to get down to like 55%, something like that, right? So call it the 1850 range. It's unlikely that we're just going to continue this like crazy drop down, right? That's not how markets work. That's not how price action works. At the very least, like this is just almost like a straight move down. At the very least, you'd expect a lower high, like maybe something like that, right? Boom. And then you get your move down. And maybe even after that, you have another, and then you finally get your move down, the coup de grace. Markets, it's not going to just droop down. Now, what's also true is this could be the end of this crazy downtrend. Like we could see something like this. So what I'm saying is we're going to see a rally at some point, no matter what. And that's an important thing to understand. People seem confused by that when a rally occurred. Like they still seem confused by that. Whether it's bullish or bearish, you're going to get some kind of bounce. The question is does the bounce do something like this, like that, and then that? Right? Or does it go the route down here, right? Either way, you're going to get this move at some point. Now, I'm not saying it has to be a move to 27, but it's going to be some kind of bounce. It's a question of, is it a bounce in a lower high and then a move continued lower, or is it the start of a new uptrend? And we won't know that until we start to see more price action, and that's what we're going to have to gauge in real time. But that's important because I feel like people want to jump to the gun. It's like, oh, this is the bottom, or no, this is a bear market rally. Sometimes it's actually we need more data, right? But again, this is just if you're gonna go down 50, 55, even 60%, you're not gonna do it in a straight line. You're gonna have to bounce at some point. And again, the same applies for gold and silver, although gold is obviously not on track to be down quite as much as miners. And finally, we'll look at Dixie because we know how important that is, how correlated that is with the metals. And so we have what appears to be a daily cycle low on day 23 here. And then we've really just consolidated. So day 1, 2, 3, 4, 5. And this is day 6 potentially, right? Now, I know some other folks are calling this a half cycle low. Honestly, it doesn't even really matter. And again, this is where I constantly mention it's important to understand, like, it's about the price action and the cycles second, not the other way around. It's like it's not about the cycles and then the price action. No. It's about the price action, and the cycles just help us understand it. Now, here's an important thing that's happened with the dollar. This is our swing high. This is our daily cycle high on day 19. Very clear, right? Very bearish looking candle. We got, this ugly candle next, and then we got some follow through. And then we got the CPI rally. The same way we had that big red candle for SPX and all the other indices, we got this huge green candle, and then we got consolidation. What does this look like to you? It's a bull flag. Doesn't mean it has to resolve higher, but right now, you would think that like this is a bull flag, right? Now this is day 6. As with everything else, it's going to have a huge reaction to the Fed tomorrow. And, that's going to be either boom or boom, and we're going to have to see what that is. But this is our setup. It looks to me like it's day 6, which if you think about it, the bearish scenario sets you up for a double top daily cycle high that's early, and then we roll over into a left translated daily cycle. And on the weekly, we still have our swing high from week 14. And so now it's going to be really interesting to see, do we make a new high above that week 14 high, or do we get a violent reversal tomorrow because of the Fed? And then and it turns out that week 14 was our ICH, was our weekly cycle high. That's what you want to really be watching for. Such an incredibly important day tomorrow. A lot of potential turning points, really. And then the next catalyst after that is going to be the CPI print, either the 12th or the 13th of October. So that's a lay of the land for the metals. Again, really, really important stuff tomorrow.